Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
I'm doing this by phone because something wrong with the Skype connection today. We were talking about the long-term German DAX, and we want to take a look at the FTSE also on a 15-minute basis. You'll see that after they've had these big moves here, we've been in a really tight trading range, not like we're here where we're going straight up. It's a little bit different. You can see that they backed off a little bit from these levels. I wanted to share with you one chart that is really quite descriptive of the patterns that we use here at 24/7. But if you look here, this is just it's a 4-hour chart of the FTSE, and you'll notice that you had a beautiful 3 drive to a bottom pattern back there on the 8th of January. Then you can see the ABCD moves all the way up. Folks, all of these markets do pretty much exactly the same thing. So this morning, with everything going crazy in the markets, I thought we would take a quick review of what's happening in the markets. The first one we want to take a look at here is the Dow Jones Industrial Average. This is going to be a daily chart. We'll get this up here for you to take a look at it. And you can see here that we've reached the 1.618 level number. I believe it's at 29,400, I believe, is the actual number in that E-mini S&P. Let's try it again. E-mini at the front door and raise the rent. The E-mini Dow Jones, which is the least of all of the 4 indices. The number 1 is the E-mini S&P. Number 2 is the Russell. Number 3 is the NASDAQ. And number 4 is the Dow Jones. Let's take a look at the Big Daddy Rabbit in the run here. Let's get it up, and we'll show you. I did these last night. And if you put this up here, you'll notice that the 1.618 on this one comes in at 91.78. So far, the high has been 91.81. This goes back since the 12th of January. We had a perfect 61% retracement there on Wednesday. That was the key that these things were not working. Remember, we were looking for the market to top around the 10th to the 13th, and you can see that we made a really nice high on the 13th, and then we backed off for 2 days, and when it went above that high, that told you that that was not any good. So we took a 10-point loss in that one, but that's the way it goes. Some days it's chocolate cake, some days it's no cake at all. You can't call in today, folks, because I'm on the calling line. After the break here, you will be able to call in, and Al tells me that the lines are filling up quickly, so get these calls in. Otherwise, you might not be able to get through today. Yesterday on Tom O'Brien's show, we had a question about Tesla, and we brought this chart up, and oh, no, tell me, there we go. We brought this chart up on Tesla. I hope it pops up, and we'll be able to see if it did. Let's just see if we're running okay here on the Tesla. I think it did. And we were talking, in fact, that made that 1.618 expansion up there at that 554 level, and then immediately broke $40 down to the 497 level. And someone asked me, where would you short it? Nothing like putting me on the spot. So what I did was I just pulled up a quick intraday chart here on Tesla. This was nothing more than a 15-minute chart. And you'll notice here, after the big move we had up there at that 547 was the high. That was the 1.618 expansion. We dropped down to 495. We rallied back to the 382, and you see where the gap is there at 1517. I said that there's a possibility that it'll stop right here or it'll stop at the gap. Well, last night, oh dear, I hope that one posted. I hope it did. Let me do the new one. I don't know if the new one did or not. Yeah, it did. You notice that the high was, the sale was at $15.13, and I said you got to risk about $7 or $8 on this. It got to $15.18. It went $5 above it, and then went all the way down to 503. The last I saw it was about 506. I don't know if it did anything like that, but if you were doing something like that, you don't have to risk very much, because now your stop is at 518, and you don't have to risk very much at all. When you're talking about a $500 stock, folks, that's a very, very low amount of risk, and that's what the patterns are all about. They're all about risk control. They're very good predictive, but only probability-wise. There's nothing 100%. The only 100% trade, the only 100%er you're going to get, and this goes back to the days when we were trading on the floor. It was a Larry Williams indicator called the calculator trade, and that is when you're looking at a position and you're using your calculator to see how much money you're making. Put the calculator down and go to the phone. You just hit a 100% indicator, because that's the greed index. That's the one that is telling you that, that's just about it. So another one is when you go out and bury your head in the sand because you don't want to look at your positions. That means you're probably getting close to getting stopped out, and that's the bottom or the top of the market. So that indicator for the calculator one is the one that probably works better than anything we've ever seen. So when you start figuring it up, and remember, greed is a harder emotion to gauge than fear. Fear has physical characteristics. Greed doesn't, other than the euphoria. So remind yourself that that's what happens. So I hope that helps as we look through some of these charts today. I wanted to focus on I wanted to do one other chart here on the crude oil, because it's I believe we're at a major spot here in the crude oil, and we'll be able to see. And so, Kenny, you're right, Kenny Rogers. All right, you'll notice here on this crude oil that it's made a nice little ABCD pattern over the last 2 days. It's probably a sale up there at 5,900. It backs off. There's a chance we could make the 3.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Mention some cycle work that was brought to my attention by our good friend Jim Flanagan. From GAN Educators. It's all about long-term cycles. I'll get this up here so you'll be able to take a quick look at it here. This is very similar to what we saw with the, let's get this up here, what we saw with the things from Bill Meridian. We have a 90-year cycle, which could be related to the 29 because that's 90 years, the 45-year cycle, which was the 1974 OPEC crisis. If you remember when I talked to you folks about the Astro stuff, it was October and December of 1974 when we had those multiple conjunctions and oppositions in October and December, making the double bottom in the stock market at 580. And from that level, we gone to 29,400 so far. So we'll see what's happening. Also, the South Sea Island bubble, and we talked about that because that was when Isaac Newton, lost all his money, and then he came back very strong, and then the Mississippi land crisis. So you'll see some of the things that we have going on here. I think the most incredible one is what's been happening with debt. We have a huge amount of debt out there, trillions of dollars between China and everybody else. This is what this thing has been built on, and I think that's where the real problem is going to happen if it in fact ever does. Folks, our bond market does not look very good. We've been talking about that for quite some time. Any move below 155 in those bonds is going to be pretty much a lot of trouble. Just look at the chart. Let's just take a quick look here where we are in the Treasury bonds. This is not quite up to date, but it's good enough that we'll be able to see that when it does break down, that it's going to look. And believe me, we're trading below 157 this morning, folks. We couldn't even make a little rally off of this thing the other day. So now, but with the first levels, we broke below 156. That's going to be the indication that it's going to go down to 148. That's what it looks like. Now, I don't know the outcome of this. Now, remember, I'm just a technician. I don't look at the fundamentals, and I get embarrassed sometimes when I have to try to explain them because I really have no interest in them. My interest lies in those charts because if the prices are going up, there's more buying. If prices are going down, there's more selling. Folks, if there were a war going on almost here in the United States, wouldn't you expect the market to to go down? Wouldn't you expect that? Well, look what happened. Look what happened with the Hong Kong market, folks. Look at this. You see this level here in August? This is when it all started. That's when the whole thing started. That's a big ABCD double bottom right there. Okay, that was in August, and here we are. We got up to, we're trading right around 29,000 right now, right at the 78% level. So all during that time, there was nothing but bad news. We kept seeing it in the news all the time, and the stock market kept rallying and rallying. So, you know, how do you justify that? Well, you can't. You don't know what the underlying factors are here. Even the real estate in Hong Kong, you'd think real estate would have got, collapsed, right? No, judge's ruling. No, that didn't happen either. So that's one of the reasons it turned me into a technician. That was, from back in 1974 when everything was so bullish with the Russian grain robbery and inflation and everything, and the stock market dropped 50% between 1972 when it topped at 1,060 and when it bottomed at 580 in October and made the double bottom in December of 1974. So that's what I'm looking at. I think it's worth bringing that up one more time because I want to take a quick look at this just to show you, what this bottom looked like. But this is nothing more than where the aspects were at that time. But these aspects are nothing more than cycles. And that's what we're looking at. You'll see here that we had these multiple conjunctions and oppositions occurring at that time. And I didn't know about this, of course, until 1986 when Dr. Ruth Miller taught me these things. And so that was the thing that when I saw that, I was very excited. And that's where the whole process of learning to write that book, Astro Cycles, A Trader's Viewpoint, we said, okay, if we have these conjunctions and oppositions, how important are they? So we matched up the conjunctions and oppositions with the with the prices. I told this story before, but and it's just a probability. You're talking, 70, 80%, and all you're trying to do is match the patterns with these aspects, and to give yourself, you're going to be wrong a few times. Just like Prince Charming, man. When you get into that swamp, you got to kiss a few frogs before you find that princess. So, that's neither here nor there. Okay, let's move on here. But I really believe, and I can tell you with a high degree of certainty, that this is where we are upside down. Okay, where we are, there we are then, is where we are now, only upside down. Tops are harder to pick than bottoms, but that's what I'm looking at. That's what I see, whether that means anything or not. Let's take a quick look. I sent this out last night because I could see a pattern forming here in the euro that was really negative. We've talked about this before, that the dollar index looked pretty stable. And if you'll notice here that this euro, we were right at the moment of truth there, and I said this thing, it looks like it's ready to break another 20 pips lower, and we've already broken down. We've made a double bottom down there already, and it's probably going to break. But you'll notice the ABCD pattern that we had here on the 16th, and that tells you that you're looking at something that's pretty good. There's nothing significant about January 17th, Mr. Z, other than being a Friday, a day before a holiday. It's almost impossible for the stock market to close low. Well, 70% of the time it closes up on the day before a holiday. There's nothing significant that the significant days the significant days were starting with the 10th with the full moon and lunar eclipse. Then on the 13th, on Sunday, we had 3 major conjunctions. On Sunday, and then Monday we had 2 more. So we had 5 within a 2-day cluster. That should not have been past 3 days. In other words, all of these ones that we've looked at over the past 80 years, well, no, it's been more than that. We went back into over 100 and some years, they've always been a maximum of a 3-day window. That means that if the high is coming in, that's basically what you're looking at there. So I see that the Nasdaq or the Hang Seng went to 29,000 again. 29,150 is the 78% level. Getting back to that, but in other words, when you look at these, like on the full moons or new moons, they have a 1-day orb, 1 day before or 1 day after. Okay, with the conjunctions and oppositions, it was 3 days, 3 days before or 3 days after. Well, we were past the 3 days. See, the so that's the whole key. Well, we'll see. Anyway, that's what we're paying attention to today, so we'll see. But it's impossible, nearly impossible for the stocks to go down today. It's, Mr. Z, it is the most difficult subject at all. That's why I like to talk about it less and less. And it's a very complex. I try to get guests on the show here who are very good: Bill Meridian, Arch Crawford, Tim Bost, Norm Winsky. I mean, I try to get these guys on to show what it is, because I'm basically, I stick to the patterns. That's really what I do. When I go off that reservation, that tells me that there's something probably a little wrong with what I'm looking at. So we'll take a break here. 877-927-6648.
Larry Pesavento has just announced a special 90-minute live webinar taking place this month for subscribers to his Fibonacci 24/7 trading service. On January 29th from 4 till 5:30 p.m., Larry will be covering how to read supply and demand and how, in combination with his trademark ABCD patterns, you can control risk and maximize profit in today's algo-dominated markets. In this live 90-minute webinar, Larry will cover a hidden in plain sight trend change pattern that gives you early entry into the trend, how to find and update the key harmonic numbers to trade against in futures, forex, and stocks, how to translate 3 go-to patterns into supply and demand and how to use them for entries, the continued importance of the opening price in 2020, and how to use the time of day when taking a position and for entry into longer trends. Sign up now by clicking on the newsletter tab on the front page of TFNN.com and select Fibonacci 24/7. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone asked a question about the coming impeachment that starts on Tuesday, which fits in nicely with our next segment, which is about talking about the political environment. I will repeat what I said yesterday, and that is there's going to be an election on November the 8th, and you're welcome to participate. That'll be the end of the philosophical and political discussion here at TFNN for my show. If you'll go back to 1998, when we had one with President President Clinton, you'll see that the stock market didn't do very much at all. It does its own thing, and when it goes up, and that's what really happens. So let's pay close attention to that, and you'll see pay you better dividends if you try to figure out what the heck's going on. I posted a chart of the natural gas, folks. We're down near a double bottom. We've been talking about a potential of that double bottom. Yesterday on Tom O'Brien's show, I focused on the fact that this stock of the UNG was coming in. Let's get this up here. You'll see that the number we were looking at was 1622. It closed at 1611. I don't know where it's trading at today, but my comment was your stop on that had to be 1592. So you had to risk 30 cents, which is roughly 3% of what we were looking at, to see if the natural gas was going to hold. Natural gas last night hit 201. It does make the double bottom down there. It's trading at 205 right now, I believe. So that's going to be very interesting to see what that's going to mean as we look forward, watching some of these other things that we see approaching here. So let's move on here to a couple other things that are very, very important. The euro, I mentioned that euro trade because we've broken, well over, just from last night, we've broken about 100 pips. Let me see, 40, 35, about 80 pips. So it looks like we're getting ready to have something going on with these things, but I don't know for sure. Who knows? I have 6 of one, half dozen of the other. So take a look. Remember, Mr. Z posted this, and I think it's important because this is the one from Tom Dumark, and Tom is successful, incredibly successful. I know he sells a lot of stuff, but this is his sequential, and he's waiting for a close on these like the NASDAQ went higher. It doesn't make a difference how higher it goes. It's when it turns is what's important. People pay a great deal of money for his signals, folks. But remember, it's got to turn down before, this thing has not had a turn down yet. How many days? I think we're up 13 days without a lower low in these stocks and stuff. I mean, that itself is an outlier event, but that doesn't mean anything. The thing that's important here is the fact that you've got that greed index at about 97, and believe me, there's nobody on the tube there that is giving any warnings. I mean, Mr. Bill Meridian came on and said he was liquidating stocks, on the 10th, and it's here we are a week later, and we had Bill on last week, and here we are a week later, and they're still higher. But that doesn't mean anything. That's a short-term thing. We'll see whether that means anything or not. I don't know. I don't even profess to know. That's the main thing to look at. We have to do a couple other quick things here that I wanted to talk about. I covered the natural gas. I covered the, what is the other one that I wanted to look at really closely? Oh, shut the front door and raise the... Oh, I've been asked to put this chart up from the Fed that we had on the other day. Here again, all I'm doing is putting it up. I don't understand this quantitative easing and stuff like that, but you can see the money that's been pumped in to our system, whether that is going to mean too much or not. I will tell you there's something interesting happened last night in the UK, and that is, it's in the European Union. The European Union decided to hold off for 3 to 5 years their facial recognition identification system because they wanted to get, they were having trouble with data. That's probably related to the blockchain stuff that's going to be coming out in the 5G network and stuff like that. But the China has been going, straight out with that stuff. So more and more of that stuff is coming, folks. And when they tell you it's for your safety, or you're going to be very hard pressed to understand that it's not for your safety. It's so that they can find you whenever they want to. They did an experiment of someone in Beijing. They took his picture and he went out to shopping and they found him within 30 minutes, exactly where he was. He didn't use his credit card. He was just tracked by the cameras that were in the air at the time. So be careful. Big Brother is watching. That's for sure. That's for sure. That's one of the problems with those, David's talking about these wallet things and those Bitcoin things. You have to be really careful because it's all computed and it doesn't. By the way, let's take a look here at the Bitcoin. I don't know if we brought it up here or not, but Bitcoin's looked pretty good here. It's had a nice run up here, stopped right at the 618 and didn't back off at all. That's usually a very good sign that something is going to happen. So keep a close eye on it. That's mainly what you want to do as you walk through these. Now, I wanted to talk to you just a tiny bit because we had a very interesting discussion from one of our dear friends, Mark Douglas and I, and we were telling each other how much we had missed him and stuff. But folks, when you're doing the trading, you see a lot of patterns, you see a lot of ideas and everything, and recommendations, and some of them work, some of them don't. But that is absolutely true. There is nothing in this world that is 100%. So when you're looking at pattern recognition, all of these patterns are doing, the only thing that they're doing is that they're quantifying the risk. Yes, they do have some predictive qualities, but that's on a percentage basis, usually somewhere around 60 or 70%. And we look at Tom Hugard, who only makes 30% winning trades, and he makes 10 times as much as all the other traders combined. So that's neither here nor there. So we need to pay close attention to that. I will have Mr. John Jameson on in the next 2 weeks to talk to us about quantum computing. This is the thing that is very heavily researched by China, and also we're trying to catch up with them too. That's something that is extremely important. What that means is computers are based on zeros and ones, but with quantum computing, they're based on 8-sided cubes. Instead of a 0 and a 1, these are 8-sided cubes. So you can see the different numbers of permutations you can get. Like if you're running something like at, say, 8 gigabytes, you're doing the same thing with quantum computing. You get 10 million gigabytes, and it does it even faster. So that's just a few of the things that we're paying attention to. Another question was about the gold market. We've talked about the gold market several times. I want to bring the chart up. Maybe this will give you a rough idea of where we think. I still think the gold chart is in a downtrend. If we get this up here, this is the daily chart. You'll see the high that we made back there at 1611. That was the 786. Excuse me, it was the 786 of 2012. It was also exactly the 61% retracement of the high in 2011. And we broke down. We dropped all the way down to 1540, and so far we've only been able to rally up to 1565, which was the 382, and then we'll see what happened from there. Okay.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I'll post a chart here of the natural gas. I want to discuss it, but we have a question here about the gold on the monthly level. Yes, the peak, the gold is definitely bullish. All I was referring to is the fact that what gold did on the day when we had this Iranian thing, Iraqi thing going on, it just made a 61% retracement of the high from August of 2011, and from January of 2012, it made exactly 78%. I mean, these are within $2. I mean, that's 0.0001%, 1/10,000th of a percent. So that's why it's so very, very important. And if we get above that level of 1611, I mean, you're going to see new highs in gold. It'll get above. I firmly believe that it'll go above 1932. That's basically it. I'm watching gold all the time. In fact, I probably trade gold more than anything that I do, because it's so easy to trade, and you have such great liquidity and everything, and you don't have you don't have slippage. I mean, my gosh, it's with electronic trading and trading in decimals like this. I mean, you've really got a way to trade gold for intraday. You can trade gold for $3. You stop and think, you folks. That's a contract that's worth over $150,000. You can trade it for $300. Give me a break. That's a heck of a deal, and with great volatility. And the crude oil is the same way. Crude oil is a little more bumpy sometimes, because there's 6 traders in the world that control about 30% of all the oil. So if those boys are in there and the market's moving crazy, be careful, because those fellas know what they're doing. 3 of them live in Singapore, 1 lives in London, and 2 live in London, and 1 lives in the United States, I was told, from a very, very reliable source. Okay, as we look at this natural gas chart, you'll notice now we have taken out the lows of August, all right? Now, if you'll look at one thing, you look down there, you see where that 1.618 retracement level, expansion level is there down there. That's why it's important to me. So the first thing that I do, and I said on the show yesterday, it's best to wait till Monday or Tuesday to buy the natural gas to see if this pattern holds. And I'm sure it's going to be, if they did buy it, and I told them not to, because of the fact that the positive aspects of the market coming back during this time is very, very important, because of the day before the holiday, it has a positive expectation. So that's all it is. Okay, now let's look at the natural gas a little bit closer through a bird's eye view. All I'm going to do now is push the 4-hour chart button. That's right. The copper is bullish. It's above the 200-day exponential moving average on the weekly. It's certainly trending up. Let's move up here to the next one here. Is copper above 290 a pound? All right, let me finish this thing on the natural gas. There's the number, folks, 198. Okay, below 198, you do not want to be in natural gas. That's for sure. And to prove it to yourself, go back to the low in December. Okay, the rally up, the 1.618 came down in January to exactly 208. We rallied up to 226, and here we are again. So the number you look at is 198. If it gets below 198 in natural gas, there's something really wrong with natural gas. And that's going to be, see, this is not bullish in copper. Okay, peak. Let me do this. Let me pull up the copper chart. Just give me a second here to do this. Hold on a second. This doesn't look bullish to me, my friend. But you know, what do I know? I'm just an old cowboy from the Rio Grande. Just a minute here. Oh well, it's up there again. Well, it's don't look too bullish. Well, it's not too bearish. Oh, it just hit the 786. Wow, that's not a big deal. Hold on here. This is very interesting here. I'm glad you brought this up, Peak. This is a really cool chart. You'll notice the high we made here just 2 days yesterday was exactly 78% at 289, and now we're at 286. So if we get above 290, that was the number I mentioned. If we get above 290, then this thing could really go. But right now, it's setting on a really interesting one. So pay attention to that. We'll see if it means very much at all. I don't know. We'll see. That's what it looks like. It's also, look at this chart, Peak. It's very great because look, from July down to September, it made a 1.27 yesterday too, just like gold did with the at the 618. Well, sometimes they work, sometimes they don't. You know, who knows? It's either. Well, let's move on here to the next one here. Do we want to look at? I believe the two markets. Watch crude oil, folks, because the crude oil does not look very bullish. We got up to $59 a barrel. You know, that is only a $1.40 rally in 3 days. My goodness. I'm not sure of the open interest increasing in natural gas. I really don't know that. I don't follow that. I follow the open interest in the bonds, the gold, and the stock indexes. And the stock indices had big increases in open interest yesterday in every single one. The Dow, the NASDAQ, the E-mini, and also the Russell. All of them had good, positive things. Open interest increases is what's going on. If you want to check the opening interest, all you got to do is go to www.cme.com, and that'll get you to the point where you want to be, and you'll be okay. So that's what we're looking at. I hope that helps. All right, let's move on to the next one that we want to talk about. And okay, all righty, let's get up here. Oh, someone they asked me to share some stories from the Merc when I traded there. One of the most memorable ones was one day I was standing outside the T-bill pit and it was packed. There was a report coming out and it was really rolling back and forth, and the traders were weaving. And Byron grabbed me. He says, "Come on, let's go upstairs." We went upstairs into the gallery where you could look down into the pits where the public was, and you could see the T-bill pit going back and forth. And Byron says, "It's going to tip over." And I said, "You mean it's going to tip over?" He said, "Yeah, it's going to, a lot of people are going to get hurt." And the T-bill pit kept going, and then all of a sudden they went one way and they started falling down over each other, and people got poked in the eye with pencils, and there were broken bones. It was really, really bad. And after that, they stacked the levels a little bit differently, but that was a big day. And the other one was we were in the pit one day, and the guy his name was Rocky. That was his symbol on his badge, and he had been getting killed, I guess, in T-bills. And he walked into the middle of the T-bill pit, right above the gallery, and he took his trousers off and dropped his pants and put his hands out, and he said, "Here, cut it off, take it all. You've got everything else." And of course, he got thrown off got taken off the floor. And then several nights later, they found him in his apartment. He had hung himself. He had lost all of his money and was very depressed. But that was really something. So, special request to look at is that these? I don't know what that is. Oh dear. Someone's asked for a special request, and I don't know what they're asking for because Gosh, Charlie, I wish you could tell me what I don't know what INO is, and I don't know what CHK is. I don't know what those symbols are. I'm very sorry. But if you'll ask us, Chesapeake Energy. Okay, I can do that. Chesapeake Energy. I'll pull that one up when we come back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as a #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of Chesapeake Energy for Charlie. I'm not able to get INO up. I'm sorry. And let's, this stock is relatively cheap. It's down around 63 cents. Usually the old rule is if something goes below $3 a share, it's probably not going to make it, but I wouldn't be buying it here for 2 reasons. One, it's too cheap, and the second reason is that I don't know anything about it, but your risk here is 69 cents because if it goes to zero, that's about it. That's the only thing I can say about that. Another question is, why does one trader hang himself and the other trader gets up and starts over again? Folks, Rocky had a lot of things going on in his life just besides the trading. He had been sick. and he also had a girlfriend that had just left him, so everything just overwhelmed him, and he was basically on the borderline of being an alcoholic, and I think it just got to him one time during the night there, and that was about it. He was a nice guy, but that was it. While I was there 2.5, almost 3 years, there were 3 instances of people taking their own life, and that's probably related to anything else on a percentage basis. I don't know, because there were thousands of traders there. So that's it. So that's what I'm watching. Keep an eye on these markets, folks, because we did hit major 1.618 expansions that I pointed out to this morning. And, of course, we can continue to go higher and higher. The probability of the market closing higher on a day before a holiday is about 70%. And then for the day after the holiday doesn't mean anything, and we're closed, but the rest of the world certainly isn't closed on Monday. So there will be trading, and they're doing electronic trading at the Merc too. So all of that will be happening. So I want to remind everybody to live every day in an attitude of gratitude, and may God bless. And please try to help somebody else out that is a lot worse than you are, because that's what we're here for. We're here to help people, folks. It's not the man with the most toys wins. That's not true. It's the man that helps the most is the one that wins. So let's keep a close eye on that. Watch that natural gas too at 198. That's going to be really interesting to watch. So far, we've been to 2008. We got 2 more cents to go, and we'll see. 877-927-6648.